Now let's move on for today's lecture about crypto landscape in the Philippines. Even prior to founding the Philippine Digital Asset Exchange, or PDAX, Nichel has always had a passion for investing. He started his career as a management associate in HSBC, where he held various roles in treasury, retail banking, and wealth management. Nichel then became vice president and headed the HSBC Trust Department. In 2017, Nichel graduated from the Wharton School with an MBA, majoring in finance and real estate. He has also held roles in investment, banking, and M&A advisory. He is also a CFA charter holder and is an active member of the CFA Society of the Philippines. While trading cryptocurrencies last year, his partners realized that blockchain technology has far greater applications than speculative trading or lowering the costs of remittance. It has the potential to make capital markets more efficient and accessible to both issuers and investors. He is here today to speak about crypto landscape in the Philippines. Let us all welcome Mr. Nichel Gaba, CFA and CEO and co-founder of Philippine Digital Asset Exchange, or PDAX. Welcome, sir.
Thank you very much for the kind introduction. It's a pleasure to be with all of you here today. I'll just take a couple of seconds to share my screen. But before that, or as I'm doing that, I just want to say thank you to all the participants and the organizers of the competition, and all the participants. And I wish you the best through the rest of the competition. Let me share my screen. Now, it's my pleasure today to talk to you about a topic that I'm extremely passionate about, and that's cryptocurrencies. Before getting into cryptocurrencies, I actually was a banker for several years. And my interest in crypto at the time was primarily from a trading standpoint. So back in 2016, 2017, there was a big arbitrage opportunity in the crypto markets. You could buy Ether or Bitcoin in the US at prices that are 30% lower than in Japan or Korea. So that was a very big arbitrage opportunity that existed for actually quite a long time, for months at a time. And that's how I got into crypto. So I would be trading crypto across exchanges, and really taking advantage of the mispricing. And it was through that experience that I realized that the crypto markets are here to stay, and that what we're seeing is really the emergence of a new asset class, and a new way of possibly facilitating transactions in the financial markets. Now, I'm sure a number of you have heard about crypto, at least, or today have heard about NFTs, DeFi, and Web3, etc. Over the past couple of years, a lot of things happened in the crypto space, and I think at this point it's safe to say that crypto's here to stay, right? Maybe 3 or 4 years ago, there were always questions about whether crypto was just a fad, a scam, or a bubble. But I think right now crypto is kind of all of the above, right? Yes, it is trendy. Yes, asset prices tend to be much higher in crypto. Volatility tends to be much higher too. But what's very clear is that the underlying infrastructure supporting the trading of crypto has drastically improved over the years. And since the start of the pandemic, just using that as a time frame, we also saw COVID as sort of act as a catalyst towards digital adoption. And kind of brought a lot more people into crypto space, certainly here in the Philippines, because of play to earn opportunities. We also saw developments in the regulatory landscape. So today there are a lot more rules now in the crypto space than there ever was. Now, while some people or some proponents of crypto might find that to be limiting, in that, okay, there are more rules, more oversight, more things that people cannot do. Having more rules actually means that institutions can now explore taking part in crypto. So regulatory clarity, in all jurisdictions around the world, uh, has played a big part in what we saw over the past couple of years. And obviously, we're also seeing more institutional support. So in the past, you could not get any of the global custodians to safekeep crypto, but today, the likes of uh, Northern Trust, Bank of New York Mellon, the big global custodians also have, or are also launching digital asset custody services. So that's kind of where we are. No, crypto's become a lot more mainstream now, and certainly more mainstream than it ever has been. Quick introduction about PDX. So we're one of the leading license exchanges here in the Philippines. Certainly, there are a lot of exchanges, right? Many of them do not operate in the Philippines. Many of them do not are not bound by any jurisdiction, and so largely unregulated. So PDAX is kind of like on the other side of that. No, our view is that eventually people would be trading crypto in the same way that today people, banks, institutions trade stocks, bonds, and FX, right? So that's kind of what we're seeing. And so at PDAX, we're composed primarily of former bankers, veterans from the fintech space. We have licensed custody partners. We're in good standing with the BSP and the SEC. And we also have the deepest liquidity of any exchange here in the Philippines today. Now, let me talk to you a little bit about kind of the industry itself. No? And talking about the industry, you can't really not talk about Bitcoin, right? Bitcoin today is actually behaving very similarly to how gold behaved in the 70s, particularly after decoupling it from fiat currency, or at least or post Bretton Woods, I should say. At that time, because gold stopped becoming money, and gold is not something that you can easily get rid of. Gold was still traded everywhere, and central banks and large institutions around the world still had sizable holdings in gold. The question then was, okay, what's gold now, right? And I think since the 70s, we've seen that gold has become the safe haven of sorts during periods of high volatility and high uncertainty. So gold took on a new role, no? So it was no longer money, but it was that scarce instrument that was traded everywhere, that allowed people to hedge against local inflation risks, or even any local risk, right? Because gold was traded everywhere. And I think that's what we're seeing with Bitcoin, right? What we're seeing with Bitcoin is that because it's traded everywhere, pretty much against every fiat currency, it's easily transportable. You don't need anyone to do it for you. It's highly divisible. It's scarce. And it has all these features that really make it a suitable alternative to gold in times of uncertainty and crises. So that's what we're seeing with Bitcoin today. Now, obviously, the crypto markets is bigger than just Bitcoin. But Bitcoin being the first ever application of blockchain technology, it's acting like a bellwether for the entire crypto space. No? So when Bitcoin does well, you can generally expect that the rest of the industry is doing well. There's more capital in the space. There's more excitement. There's a lot more people coming into all the projects in the crypto space when Bitcoin does well. But more important than Bitcoin probably is the emergence of blockchain technology, right? And I will talk to you a little bit about blockchain technology because we're seeing a bunch of applications today that probably you've heard na, no, as maybe buzzwords or things that you hear about pretty much everywhere you go. Cryptocurrencies are just the first application of blockchain technology. So what's blockchain technology? I don't have a slide to try and explain blockchain technology, but let me try to explain it as best as I can. Um, Today, most technologies are built on centralized technology, right? For every app that you have on your phone, um, there is a back end service, right? There is a back end application that talks to that app, and every back end service is plugged into some kind of database, right? And today, most of those databases are stored in centralized or are housed centrally, right? There is one party, for example, AWS, that hosts the data that's used by the application. Okay, so centralized databases. Um, but in the context of sending data, that's fine, right? Centralized databases are efficient. But if we're sending value, no, items of value from one person to another, it's very important that the database remains uncontrolled and uncompromised, right? And that's what Bitcoin did, right? So Bitcoin was the first instrument that you can transfer it from one person to the next, and no one controls the ledger uh, that records how much Bitcoin you own. Now, fast forward, blockchain technology has now been applied to so many other things, and let's talk about them briefly here today. I'll focus on applications that are very popular in the Philippines. Number one is remittances. Now, again, no, you might wonder, well, I don't know anybody who remits money to the Philippines using crypto. And you're probably right, right? Because the remittance use case for crypto is actually not it's not a consumer use case, no? What we're seeing lately is that traditional remittance companies are starting to use crypto to transfer flows from sending partners to the beneficiaries here in the Philippines. Today, I think it's roughly at a little over a billion, maybe $1.5 billion per year being remitted into the Philippines in crypto, and we should probably see more of that. We should probably see that use case grow also in the coming years because of the capital efficiency that crypto brings to the whole remittance business model. So this is one use case that's very relevant to the Philippines, and right now that has gained a lot of traction. Asset tokenization is also quite popular. What is asset tokenization? Well, earlier I alluded to the benefits of Bitcoin, no, from the standpoint that it cannot be controlled, it's not centralized. Its feature of being decentralized and self-sovereign actually makes it more secure, right? Because we don't need to rely on trusted parties to facilitate transactions. Now, applying that technology, no, to something like traditional stocks or bonds, or structured products, derivatives, contracts, you can improve the whole financial market infrastructure by removing operational risk, by minimizing manual reconciliations and errors. A lot of you here probably will work in the financial markets when you finish school, or you're probably currently already in the financial markets. You would know that, on the back end of things, there's always errors, there's always reconciliation breaks. A lot of those things will go away in a world where we have tokenized traditional assets. Now, I'm pleased to share that actually the Philippines is one of the leaders in this use case. Last couple 2 years ago, the Bureau of the Treasury, in partnership with PDX and Union Bank, launched bonds.ph. Now, these are national treasury bonds that are recorded on the Ethereum blockchain. So that's one example of asset tokenization. I think eventually what we'll see is more of the existing equity securities take crypto form and be traded so easily as easily as we trade crypto today. Now let's talk a little bit about the metaverse. What's the metaverse? Part of the reason it's so difficult to describe what the metaverse is because the opportunities or the multitude of directions that the metaverse can go is just so overwhelming. Maybe if you had seen the movie Ready Player One, right, where you enter a virtual world and you pretty much could live another whole life in that world, distinct from your, I guess, IRL, no, or your physical in real life. That's kind of what the metaverse can be, right? Not saying that it will be like that in the future, but today we can create alternative worlds, no? How does that work? Well, or how is blockchain technology enabling that? Well, right now, uh, if you let's say if you play Warcraft, right? If you play World of Warcraft, you have a ton of gold there. You worked so hard, you spent 100 hours a week playing the game, and you've earned so much in gold, but you can't really use that gold to buy anything, right? You can't buy anything from 7-Eleven. You can't transport that gold into another game. So largely, the value you created in that game is confined to that particular game, not because it's not valuable, but because that game has its own centralized database, right? So yan na naman tayo about centralized databases, no, and how blockchain technology can solve the problems associated with centralized ledgers. Now back to that game. So let's say there's a way for you to take that gold out, no, of Warcraft and use it to convert into peso and then buy a drink from 7-Eleven. Okay, so that's an example of what the metaverse can do. No, we can integrate what historically were disparate systems into something more integrated and at the same time a lot more value adding. Okay, but yeah, long story short, everybody's excited about the metaverse. I think Facebook's rebrand, as much as anything, was to send a strong signal internally and externally that they hope to enable more metaverse applications. So in the Philippines, what are we seeing now? Well, in the Philippines, probably the most popular application of the metaverse or of the metaverse use cases in play to earn. People can play games. So these are just examples of popular games. No, obviously over the past couple of months, the games have been struggling. Right, Axie Infinity, Pegaxi also is struggling a little bit. But what is this essentially? No, tong play to earn na to. Bakit naglalaro ka ng Axie Infinity? Pwede kang kumita ng more than minimum wage or even higher. Well, the fact is that when you play Axie Infinity, you earn tokens, and those tokens have value in the secondary market. They're listed somewhere. There's buying and there's selling of these tokens. Now, it so happens that prices in the crypto space were so high or remain high that a person earning tokens then converting to pesos can make more than minimum wage in the Philippines. So there's what we're seeing here is I would say, an arbitrage opportunity, right, between um, the crypto markets globally and the Philippine labor markets, right? So if everyone in the Philippines were just no longer working na, playing a game na lang just to earn tokens and cash out to pesos. Well, what's gonna happen is that the gains from the game will kind of normalize, right? And wages in the Philippine labor market, because there's a reduction in labor supply, wages are gonna go up to kind of like offset that. So right now, the mispricing, quote unquote, or the arbitrage is certainly still there, right? Right now, people don't really talk about play to earn anymore, because maglalaro na lang ako ng game. I might as well enjoy it also, right? So what people are talking about these days is play and earn, right? Where you can play a game, but at the same time you're enjoying and making money as a result. Okay. So play to earn is still super popular here in the Philippines, and I expect that there will still be more games to come, no, and more applications to come that follow a similar model to Axie Infinity. Okay. Maybe a little bit about Web3. Okay, so a lot of the participants here probably were not, no, we're not ever exposed to Web1. I grew up at a time when the internet was just becoming mainstream, and that was Web1, no? Where all you could do really is go to websites, right, and read whatever's posted there. Can't do much. You can send an email, yes, but uh, basically we were all just consumers of information on the web. Web 2.0 is different, right? Web 2.0 allows people to interact, right? That's where so today we enjoy Web 2.0, social media. We can post pictures and download pictures, see pictures of our friends on Instagram, upload our thoughts on Twitter, have people respond to them. So that's Web 2.0 now. Web 3.0 is kind of what we're excited to see, and it's really connected virtual worlds where we can also transmit value. Okay, so that's why it's not just about reading and writing data anymore. It's about reading, writing, and owning, right? So you can actually create completely virtual economies now, because not only can we read and write on Web 3.0, but we can start to respect private property. We can start to have economies built on Web 3.0. Last use case I'll talk about is DeFi, right? Now I don't know how exposed you guys are to DeFi, but DeFi just stands for decentralized finance. Okay, and that buzzword caught fire because in comparison to everything else, DeFi remove the intermediary, right, from all financial services. Historically, we've never had financial services without a financial service provider, right? If you are a saver, you go to a bank, right? You don't lend money out directly to strangers. Okay, you go to a bank. If you're a borrower, you go to a bank because you don't know all the people in the world with excess cash, right? So that's an intermediary, right? The bank. In the FX market, you go to an FX dealer, right, or a broker. In the stock market, you go to the Philippine Stock Exchange. So that's centralized finance. Now, DeFi is this whole trend of like removing the persons in the middle and replacing them with smart contracts. So what if you can just deploy a smart contract that says na borrowing of 100 ETH, and for every dollar of ETH, 0.05 ETH is going to get paid in a year. Okay, so you can create a smart contract loan, and then two individuals who don't know each other can just take either side of that contract, right? And all of a sudden, you have ano na, you have a banking service without having the bank in the middle to facilitate and ano, and uh, charge fees. Now, is DeFi ideal, or is DeFi where we're all going? I'm not sure, because um, financial services are tricky in that they're highly regulated. They're very dependent on local laws and regulations, and it's not always a good thing that records cannot be undone, right? Or ledger entries cannot be undone. I think that, to the extent now um, we still need controls against anti-money laundering. We still need controls against fraud. We still need mechanisms to provide protection to consumers. I think that, CFI is not gonna go. It's not entirely gonna go away. We probably will end up with in a world where there will be some centralized services, but there will also definitely be some services that become completely decentralized. Okay, so I will stop here, no, so that we can spend more time with Q&A. Thank you so much for listening. Certainly, the crypto space is something that's super relevant in the world of finance, and I hope to see our participants here enter the industry and keep crypto in mind as a potential tool for innovation.
Okay, thank you. For our participants, if you have any questions, or I'm sure Nichel will be very, very accommodating into answering any queries from our participants and from our other attendees. I believe we have other attendees other than the participants. Okay, Sir Robert. Okay, go ahead.
Hi, Nichel. Long time no see. Good to see you. I think my question would be, that was an interesting point. Effectively, these are introductions to companies. We can effectively participate in their virtual world. How does that change or modify the buying/selling experience? And how does that upgrade or downgrade, things such as customer disclosures, adequate information being given to clients, or being given to buyers? So what's your take on that?
Yeah, so well, first, it's a long time no see, Rob. I don't know when the last time we saw each other was. But yeah, look, certainly, when disintermediation, which maybe the proponents of crypto have used or have spoken of very loosely in advocating for crypto, failed to account for all the services that go all the services that actually surround and support trading, for example, or buying and selling stocks. That buying and selling stocks, it's not just about buying and selling stocks. It's about understanding a buyer's investment objectives. It's about understanding risk profiles, about advising consumers on what they should or should not buy. Now, my take on this is that a lot of these services will probably not go away, right? But the way in which we facilitate trades, maybe we no longer need to pick up a phone to place an order manually, right? Maybe eventually we can all do that through the phone. Maybe eventually everyone can connect directly to the Philippine Stock Exchange order book and get real-time price discovery. So I think a lot of players will work to make that happen, right? Regulators will undoubtedly make sure that whatever disintermediation takes place, somebody will still have to be liable for AML. Somebody will still have to be performing suitability assessments. Someone will always still have to be hand-holding and protecting the consumer. But this is not the first time we've seen the world of finance evolve, right? We've gone from like gold coins to banknotes to then checks to credit cards to ETFs to derivatives and now to e-money, right? I think this is just another I think another innovation that we're gonna have to adapt to.
Thank you. Thank you very much.
Okay. Any other questions from our attendees? Okay, we have one from the chat box. What does the BSP do to address cryptocurrencies? Is it possible for cryptocurrencies to be recognized as legal tender?
Yeah, so the BSP actually has been one of the more advanced regulatory agencies in the world with regards to crypto. And the approach that the BSP took was certainly very interesting and value based. No, they saw that in the early days, crypto could be a very valuable innovation in the remittance space. So what they did in 2007 and 17 was they expanded the MSB rules to include virtual currency exchange as a service. In other words, they regulated a person's ability to convert fiat into crypto. And that was very important, right? Because if they did not regulate that, then remittance companies today would still not be able to use crypto. But obviously, it's a very different story. Very different story today. So the BSP is still in the process of refining the rules to accommodate risks that we are slowly uncovering now. Today, there are very effective AML tools in the crypto space that arguably don't even exist in the traditional financial space. No, tools that they probably will require exchanges to use. Now, will the BSP recognize cryptocurrencies as legal tender? Actually, that's probably more a legislative question. No, the designation of an instrument as legal tender isn't just about whether stores should accept it or not, right? The designation as legal tender means that the government will ensure that the instrument that's legal tender will be enforceable on settling any obligation in the country, right? So it's a very powerful designation, and it's very difficult to designate as legal tender an instrument that the state itself cannot control, right? Because what will happen then is the state will be subject to the market movements of that cryptocurrency. What's more likely to happen is the central bank will create still Philippine pesos, but instead of mint coins, right? Metallic coins or banknotes, or electronic money in the form of BSP demand deposit accounts. They can mint money in the form of crypto or like a central bank digital currency.
Okay, we hope from Equinox Capital that Nichel was able to ask your question. Okay, next question. Good afternoon. May I know your insights po about Pi crypto?
Yeah, so look, I think Pi was very popular, and for all the wrong and right reasons. Now, I try not to comment so much on specific projects or specific tokens, but I will say that because the space is still largely unregulated, meaning there's not yet a lot of rules. And even if there were rules, there's not a lot of enforcement. It is, and right now there's a lot of capital still flowing in the crypto markets. It's kind of it's kind of the Wild West, no, where you always have to be protecting yourself, doing your own research on opportunities and making sure na you're not taking part in anything that eventually could hurt you or other market participants. So yeah, not to speak specifically of any token or project, but this is still a very risky space. No? A lot of players see it as an opportunity to make a quick buck, and sometimes at the expense of others.
Okay, that's from Team Sick Club. We hope that Nichel was able to answer your question. Okay, here's a direct question. Hello po, question lang. What's your take po on its environmental effects considering the existing environmental issues we already have?
Yeah, look, I think the consumption of, for example, Bitcoin is equivalent to a large country like Argentina, and today maybe even more than that. Now, the beauty, or I guess I would say the beauty and the pain, no, of new technology, is that they do come with costs, right? When cars were first introduced, right, it made traveling much more efficient. It expanded, arguably, in our ability to interact with fellow citizens. It revolutionized trade because you can now move goods and services from one city to another. But it did introduce environmental costs, right? So environmental costs are part of the economic equation. Is it correct that something like the environmental effects of Bitcoin is not really being overseen by anyone? It's probably a political question. But what's quite clear is that every piece of technology that's created value for society undergoes iterations in its life, right? Take the car industry, right? The early vehicles were probably as big a gas guzzler as there ever was, right? And today we have very efficient engines. We have hybrid cars. Eventually, we will have electric cars. So that technology is evolved. Now, crypto is arguably 13 years old, right? It's a teenager, and we're seeing newer networks be far more efficient in the way that they're supported.
Okay, sorry. To HJ, that's AJ, HJ, sorry. Thank you for that direct question. Should we move on to the next question, Nichel?
Yeah.
Okay. Okay. Is the automation of buy and sell orders also part of PDX roadmap?
I think I'm not sure what automation there means, no, but it's our intention to have advanced order types at some point down the road. Obviously, they're a little more they're a little more complex, right? So before we go to market with these advanced orders, we're gonna have to thoroughly test them and make sure that they're very transparent to consumers on what these advanced orders could do.
So that's from Rika. Okay, from Mr. Dan Nielsen D. I'm from the hi, Nichel. I'm from the financial services industry and relatively new to crypto and DeFi. How developed are the crypto markets versus traditional financial markets? Do crypto derivatives such as call options or put options exist?
Yes, actually, I would say that it surprises people sometimes, no, but the market cap of cryptocurrencies around the world is already in the trillion. It's already more than a trillion, right? Almost, I think almost 2 trillion today. That's massive, right? I would even say that it's much easier to see advancements in the crypto markets than in the traditional markets, just because you don't have the burden of legacy infrastructure. So yeah, the answer is yes, there are crypto auctions, there are derivatives. There are actually more advanced structure products where even consumers just sell volatility, quote unquote, right? You give a notional, you sell volatility, and then instantly you're matched with a counterparty. You don't have to vet participants. You don't have to sign any document to enforce your rights. The technology will enforce your rights. So yeah, I would say it's super advanced. And the market right now in crypto is certainly much deeper than even our capital markets and currency markets combined.
Okay, thank you for that. Next one from Zongi. How about the SEC? What kind of enabling regulation do you need from them to encourage more adoption of bond tokenization?
So actually, the SEC for its part, no, already drafted rules around digital assets, right? So recognizing that crypto can be another form of security, right? Right now we have two forms there, right? We have certificated and we have scriptless, right? Scriptless either with BTR ROS or NROS or with the PDTC. And they've recognized that crypto can be a third form, right? And they're calling it digital assets. So right now, the draft rules on digital asset offerings and digital asset exchanges are open to the public for review and comment. And it's very important, I think, for the crypto markets to see these rules be implemented, no? Because it will clarify a lot of the questions that most issuers have today, which is that if I issue a token, or can I even issue a token to raise capital?
Next question. As a crypto knowledge beginner, where do you see crypto going 3 to 5 years from now?
I probably was asked that 3 to 5 years ago, and probably I probably I probably didn't get it right, and I probably had underestimated where it would be. So making no predictions or no specific predictions. I think in the next 3 to 5 years, the user experience of taking part in crypto will be so much better that we won't see any more distinction between the crypto markets and the traditional markets, right? And I say this looking at how the internet was in the early 90s. I mentioned, like, I grew up or I'm part of this generation or demographic that had to be told by my parents that you got to be careful with who you talk to sa sa internet, delikado yan. Or if you submit your homework and your research came from the internet, your teacher will tell you hindi yan reliable, you should go to the library. But today that's ridiculous, right? Today we know na even kids take part in the internet safely. If we want to fact check our teachers or our librarian, we actually go to Wikipedia. So the web is now part and parcel of daily life, and I think crypto will be the same thing, but it's really the user experience that needs to improve.
Okay, thank you for that insight, and we hope that it will be correct this time. No underestimation happening. Next question. How do you think crypto can change the financial landscape locally?
In many ways, no. I'll try to be specific, right? I'll name a few top of my head, right? Number one is in the FX markets, right? We all know that the Philippine peso is an exotic currency, and so we all trade with the dollar, right? If we want to trade with, if we want the peso to be converted to, let's say, the GBP, we go through the US dollar, right? Everything goes through the US dollar. Now, what that means is it's only natural, right? Because we don't have organic liquidity between peso yen, peso GBP, peso CAD. we always would have to go through the dollar. But what that creates is more friction, right? Because we're dealing with two sets of correspondent banks, two sets of FX dealers, two sets of parties who will have to, pre-fund the transaction. That's how transactions are done in real time. Di ba? We maintain banks maintain balances with other banks. So all of that introduces a lot of costs that if you try to calculate what exactly is the cost of the remittance industry in the Philippines, it's about 7 to 8%, right, which is big. Okay. Now crypto can eliminate all of the pre-funding, which reduces that real cost to something like 0.5% or even less. Okay, so that's one example. Another is in the capital markets, right? The reason why, or a big part of the reason why it's never really gone mainstream in the Philippines, and we've only had maybe 1 or 2% of our population take part in the capital markets, is because it's intermediary based, right? And we cannot expect that members of the members of the PSE will open branches everywhere in the Philippines so that they can, accommodate traders from every municipality. That's not commercially feasible, right? And so most intermediaries have, converged on the big cities, and that's limited the market, right? So that's another way that crypto can be value adding here, right? Because you don't need intermediaries to facilitate transactions. So those two, I'll pause here, because I could go on forever. I have to stop myself.
Okay. Okay, we'll move on to the next question then. What are the biggest benefits of blockchain technology, and what are the main motivations or advantages of banks to adopt blockchain in the delivery of financial services to their customers?
Yeah. The blockchain technology is not just a public blockchain, which is what we see today. We can create private blockchains, permission blockchains, and there's a very real benefit to even applying the same technology to bank internal processes, right? If you work for a large bank today, you would know that a big chunk of the bank's staff do something related to reconciliation work, right? Work related to mirroring ledgers, right? Or performing manual entries here and then performing manual entries there, having someone check it and then approve, right? So there's a lot of that, right? Where despite the maker checker controls in place, there will be errors, right? And then with errors, you need someone else monitoring the errors, and then you need audit, you need risk officers, etc. So with blockchain-based systems, you don't need any of that, right? Because the ledgers can talk, right? The ledgers can enforce their own rules. The ledger for, let's say, the manager's check will say, no, I cannot clear this check because this one does not have funds, right? And when the check is deposited, the ledger can talk to the account to release funds, etc. So there's a lot of things that you can automate at the ledger technology level. Obviously, it will result to fewer errors, faster processing times, and hopefully a better customer experience. Now, that's just one. No? There are many others along the lines of reducing friction to lower the cost of services.
Okay, thanks, Clive. Hope we answered your question. Okay, another question. Will you still believe in crypto even if prices crashes down?
Oh, I never really saw the price of crypto as an indication of adoption. Just because Bitcoin hit $20,000 in 2017 and $60,000 just recently, did not change how I believed crypto was gonna go mainstream. No, I'm more interested in adoption, right? And what we know today is that there are far more institutions adopting crypto today than there ever was, right? And because of adoption, it's now become very very hard to dislodge crypto from daily life. And yes, tomorrow Bitcoin can crash from 38,000 down to 3,000, but still you have exchanges, you have brokers, you have fund managers, you have custodians already in the crypto space. So I will continue to believe that this instrument will be an essential part of the financial markets. And in fact, the fact that I am not a crypto fund manager, but I am a crypto exchange operator, says that it's not the price that I was ever going for. You know, it's really the infrastructure.
Okay. Okay, here's a simple question. How can I simply market crypto or encourage crypto to my friends?
Um,
Fairly
you know,
simple one.
yeah. Sometimes the benefits of or the way in which people are attracted to crypto are not exactly related to the benefits of crypto. What I mean by that is, I would bet that a lot of people entered crypto because it was on the way up, right? And
Yeah.
then you could make 20% on a very good trading day, right?
Yes.
But we all know that uh, Morgan Stanley, JP Morgan, Goldman Sachs, UBS, all the big banks did not adopt crypto because of that, right? Because that is just bubbly. So how do we convince our friends? Well, I would say na, well, if prices are going up, I would use that. But if prices were not going up, I would say that it's having a crypto wallet is as important as having an email address in the early 2000s, right? If you don't have an email address today, you're actually not going to be able to take part in anything. No Facebook, no Grab, no Twitter, no Instagram, no Facebook, no Netflix, nothing, right? So Web 2, the mobile phone, right? Having a mobile phone number and having an email address, that's your ticket into Web 2. A crypto wallet is your ticket to Web 3, right? So it will happen, and better you get it now than later.
Okay. So that's how to market. Okay. Follow up another question. In a conservative Filipino market, how can crypto develop as an investment option rather than a shady outlet of excess money?
Hmm. I think it will always be an outlet of excess money, right? But that's not because of crypto, right? That's really because of um, how portfolios are managed and how investors behave, right? Um, why is it about portfolio management? Well, we all know from modern portfolio theory that you get the best returns in your portfolio if if you mix, if you have a diversified set of holdings, right? And there's actually no greater diversifier for a portfolio today than having some crypto in it. It's very volatile. It has very low, even negative correlations with other assets, and the risk adjusted returns are very high, right? That alone makes crypto already a must have in a portfolio, right? The allocation should not be zero, I believe, in my opinion. Okay. Now, uh, why is it that Filipinos, or why is it that Filipinos tend to flock to opportunities where there are parang get rich quick propositions. It also might be a function of the fact that we have very limited investment opportunities, right? Here in the Philippines, we have the PSE, we have funds and UITFs, very well managed, but still also a bit a bit limited in scope. We don't have a proper commodities market. We don't have
Yes,
a real estate
that's
market
true.
that we can really largely take part in. So yeah, it's also a function of the fact that there's not a lot of outlets for people to make it big.
Okay. Next question. Why are some non-fungible tokens being sold for millions of dollars? What makes some NFTs so valuable?
Ah, yeah. Look, a lot of yung NFTs that we see today are just, really cute, sometimes poorly created JPEGs, right? And yes, they're being sold for millions of dollars. So why is that? Well, you know, I I have to go back to the fact that all of these things are being listed in the secondary market, right? And whenever something is available in the secondary market, there is a value to it being exchangeable. In fact, to prove that point, there was this Indonesian guy who took selfies of himself, right? One selfie for every day. And then he sold all of his selfies. And just from the royalties alone of trading, I think he made around $200,000, right? Is he handsome? I don't
That's
know.
very
Is he
subjective.
That's effective, right? But people wanted to trade it, right? And people did trade it. So uh, uh, what I'm saying is maybe with art, NFT art, beauty is in the eyes of the beholder. But quite simply, there is a lot of supply of capital in the NFT space, and very few um, good targets or very few good assets to purchase, right? And yung NFT market tends to snowball, right? If everyone thinks that, oh, hey, I must have a bored ape, then the next marginal buyer will think that he needs a bored ape. And if Steph Curry buys a bored ape, then the next big NBA star will want a bored ape, and it just snowballs, right? That's kind of how I guess the secondary market in crypto has tended to behave.
Okay. Next question. In your opinion, what should be the investor profile of a crypto trader or investor?
Um, uh, I think that from a portfolio standpoint, crypto is probably something that has a space, right? Like I know na Mr. Rob Ramos here is the master of modern portfolio theory here in the Philippines. Um, uh, it's a very diversifying instrument that belongs in any portfolio. Now, if you want to, I guess, over index on crypto, or if you want to have an outsized position in crypto, then probably you should be somebody who doesn't need liquidity in the short term, because in the short term prices are super volatile. You probably need to have a higher wealth base just so you can withstand potential losses. And you should probably be a bit more sophisticated, because unlike in most traditional assets, you don't get the benefit of investment advisors or analyst reports in the crypto space.
Okay. Moving on to the next question. Thoughts on cryptos, ETFs, and coin baskets?
Thoughts on crypto ETFs and
Yes, yeah, coin baskets.
right. So I think when was that? I think about 3 months ago, a Bitcoin futures ETF was approved. Now, I think having ETFs are important to uh, the development of the crypto markets. No, and there's a saying: if you can't bring Muhammad to the mountain, you bring the mountain to Muhammad. I think this is what's happening here, where because it's very difficult to fit crypto in uh, in the existing regulatory frameworks for fund managers in most jurisdictions. Um, you bring crypto into an ETF and make it now an investable asset, right? So yeah, I think it's so important to mainstream adoption, and we should see more crypto ETFs come to the market. But eventually, the question will arise, right? Like, why do we need all of these to be in a fund or in the basket? We can all just invest directly. But I think today, we're still a ways away from that.
Okay. Moving on to our last question. We apologize, we don't want to overwhelm our speaker. Baka we won't be able to get him back. Okay, last question. What do you think is the defining trait of cryptocurrencies versus other investment options? I think this may have been answered already, but just for the clarification of the questioner.
Sorry, I don't see the questions. Is it in the chat
It was
box?
sent to, no, it's sent to me direct.
Okay, sorry. If you could repeat that.
What do you think is the defining trait of cryptocurrencies versus other investment options? Here, I'll also type it.
I think when crypto kasi first came to the market, everyone in the world of finance's reaction is to try and bucket it into the existing asset classes that we know and know how to value, right? Are these equities? Of course not, because there's no cash flow. You can't do a DCF, right? You can't do comps. Is this debt? No, of course not, because there's no yield and there's no issuer. You don't go after anyone. Is it a commodity? No, it's not, because you can't hold it. You can't use it for anything. You can't eat it. Right? Is it FX? No, it's not, because it's not legal tender, blah, 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 blah. So I think the defining trait of cryptocurrencies is that it's not anything we've come to know and understand before. It's something that's completely new. Bitcoin is so different from a security. And in fact, Bitcoin is so different from other cryptocurrencies also, right? So in a world where, maybe the traditional tools for evaluating investment options no longer work, then this probably calls for new ones to be developed, right? So the most defining trait of cryptocurrencies today is that we are all equally new, and we are all starting from the ground floor in understanding and being a good investor.
Okay. Thank you for all the questions from our participants, attendees. Actually, we have a wide profile of people asking questions from this lecture. Okay. Maybe we should wrap it up. Thank you very much. Thank you very much, Nichel, for gracing us with your presence.
Thank you so much for inviting me here. Certainly very happy to have met all of you here today, and happy to help with anything related to crypto or otherwise.
Yes, thank you very much. And we hope to see you again sometime for continuing on learning regarding crypto. Thank you.
Thank you, Nichel.
Thank you. Okay, as for an announcement for everyone, we will be issuing an e-cert for this special presentation. Link for the e-cert request will be posted in the chat box. Make sure to fill it out online before and submit it before 8 p.m. Okay, again, reminder, fill out the online form for your e-cert request and submit it before 8 p.m. Okay, we hope that everyone learned a little bit or more to crypto than what you already know. I, for one, learned more than what I already know, especially with the questions that were being asked. So now to conclude, Mart and CFA Society Philippines would like to thank once more the event sponsors and our event partners. For our gold sponsors, we have Land Bank of the Philippines and China Banking Corporation. For silver sponsors, we have Bank of the Philippine Islands, Maybank Philippines, and Philippine Digital Asset Exchange. For bronze sponsors, we have AFS Philippines, Bank of Commerce, GFI Group Philippines, Robinsons Bank, Traditional Financial Services Philippines, and Tolet Pibon Philippines. And lastly, our event partner, Bloomberg. Thank you again for joining today's lecture series for the Mart Cup, an intercollegiate bonds trading competition. We'll see you in the lecture or in the future lectures as we continue our learning journey on bond investing. This is your host, Camille Hernandez Danzon, saying good evening and goodbye for now. See you all again next time.